Hi everyone, it's Shannon Smith from Smart Financial Planning. I just want to go through with you today, what is TPD linked? What are we talking about with TPD linked? Why might you want to consider this with your insurance policy? So let me go through. So TPD insurance, which is total and permanent disability, is basically giving your family comfort that if something happens to you where you are totally permanently disabled, so you have survived a particular situation, but you are unable to work, and you are then going to be insured from a likelihood of success and likely to get a successful payout from that. Now, there's two main ways to structure that TPD policy. You could have it linked or standalone. So linked, you can claim on this, and then the total you're insured for may be reduced on your other policies that it's linked with. Or standalone, you can claim on this policy and only one of your insurance products is impacted. So let me just go through what we mean by this, because this is an important part, and it will also result in some impact on your insurance premiums as well. So linked life insurance policies combine basically life insurance, different types of insurance products together. So the sum insured is for a total amount. So linking your policies will generally result in a cheaper premium. So for example, if you have $250,000 in term life insurance, so your life insurance, $100,000 in TPD insurance cover, and $25,000 cover in trauma. Now I'm just using some round figures there. So although the above represents a combined total of $375,000 worth of cover, the maximum sum insured is only $250,000, and you can't claim more than that. Because they're linked, you can't get all three policies. You can only get up to the maximum. So for example, if you had to make a claim under trauma, which was the $25,000, and a payout of the $25,000 was made, then the total sum insured would reduce to $225,000. And likewise, if you made a claim under TPD and $100,000 was paid out, then the new sum insured would be $125,000. So being linked, it's actually linked, and it means that when you do have one payout, you will actually have an impact on the others. But it does definitely result in a cheaper premium overall. So that is often very appealing for people from that perspective. A standalone policy is where the standalone policy still bundle your insurance together, but the sum insured is set for each different insurance product. So what that means is you can have the same level of cover as detailed in the prior example, but if you claim on your TPD, it doesn't affect your life or trauma. It also means you won't be able to claim for more than a certain amount of each type of cover. So the maximum you get, for example, in trauma is $25,000. So standalone is basically, if you do have to claim, it's not going to impact it. So just going through what are the key differences. So if it's linked, the benefit, I guess, of it being linked, a linked policy, the cost of cover definitely reduces. Once you have a claim and your benefit amount is reduced, your premium will also go down as well. Bundling does help save time and hassle associated with multiple insurance policies. So you don't have to communicate with many different policies and all the different payments. It can be all linked together. And there are some other options, which I'll talk about in the next slide, on life buyback. Cons, it must not exceed the life insurance cover amount. So it doesn't matter what you have for the others, it will never exceed. And if you need to make a claim on a bundled cover, your life insurance benefit amount and the others will be actually reduced by that. Whereas a standalone benefit, if you claim under your life insurance benefit amount, if you make a claim, your life insurance will not be impacted. So if you make a claim under trauma or TPD, it won't be impacted and you'll still have your full life cover. There's one of the cons, there's no payment will be made under TPD insurance unless you survive for at least 14 days after suffering the illness. So you could potentially have a situation where you hurt yourself or have the illness, you survive over 14 days and you therefore get paid your TPD insurance. And if you were to pass away, your family would get paid then also the life insurance. So if it is standalone policies, you potentially could have, in a sense, double amount there, whereas under a linked policy, you would get paid the TPD and then that would reduce off the balance that you have for your life insurance as well. So what were some of the other options we were talking about? When you take out this type of product, you will have another option. If you do have a linked policy, you can have an option which allows you to buy back a benefit amount of your linked life insurance. So let's just say you did a claim under your TPD, and it will say 100,000 or 100,000. You could have an option in your policy that says that you have an option to buy back that amount if you do make a claim. Now, obviously, there is a cost associated in your premium to have that feature available, but that could be something to think about instead of having standalone policies. So you do get the benefit of having only one insurance company to go to, and the benefits I mentioned before about the linked policies. Only this buyback ensures that the con of the reducing your cover can actually be managed. So there's some of the things to think about when we're looking at the linked versus standalone insurance. If you do have any questions, please don't hesitate to give us a call and we can assist you. Thank you.